Hello and welcome back to our channel. Today we're diving into the exciting world of finance, answering a question that many people wonder about. How does the stock market work? The stock market plays a crucial role in our global economy, and understanding its basic principles can empower you to make informed investment decisions. So let's get started. Before we dive into the details, let's begin with a simple definition. The stock market is a marketplace where buyers and sellers trade shares of publicly traded companies. These shares represent ownership in the company and are bought and sold through exchanges like the New York Stock Exchange, NYSE, or NASDAQ. Now that we know what the stock market is, let's explore the key players involved. The primary participants in the stock market are investors, traders, and companies. Investors are individuals or institutions that buy shares with a long-term perspective, hoping the company will grow over time. Traders, on the other hand, aim to profit from short-term price fluctuations by buying and selling stocks quickly. Finally, companies raise capital by offering shares to the public through an initial public offering, IPO. Now let's take a closer look at the process of buying and selling stocks. To buy or sell stocks, you need a brokerage account, which you can open with various financial institutions or online platforms. Once you've funded your account, you can search for the stock you want to trade. Each stock has a unique ticker symbol, like AAPL for Apple or GOOGL for Google. When you place an order to buy or sell a stock, it goes through a few steps before the transaction is complete. First, your order is routed to the exchange where the stock is listed. The exchange matches your buy order with a sell order from someone else, and the transaction is executed at the prevailing market price. This process happens almost instantly due to advanced electronic trading systems. Now that we've covered the basics of buying and selling stocks, let's talk about factors that influence stock prices. Stock prices are influenced by a multitude of factors such as company performance, economic conditions, industry trends, and investor sentiment. Market indices like the S&P 500 or Dow Jones Industrial Average track the performance of a group of stocks and provide an overall snapshot of the market's direction. Investing in the stock market can be both rewarding and challenging. So let's touch upon some key investment strategies. Investors employ various strategies based on their risk tolerance and investment goals. Some popular strategies include value investing, where investors seek undervalued stocks, and growth investing, focusing on companies with high growth potential. Additionally, diversification, which involves spreading investments across different asset classes and industries, can help mitigate risk. Lastly, it's essential to keep an eye on market trends and stay informed. Let's discuss some resources that can help with this. There are numerous resources available to stay updated on the stock market, such as financial news websites, mobile apps, and professional brokerage research. These sources provide market data, company analysis, and insights from industry experts to help you make informed decisions. And there you have it, a brief overview of how the stock market works. Remember, this video only scratches the surface, but it should give you a solid foundation to start your investment journey. As always, make sure to do thorough research and consider consulting with a financial advisor before making any investment decisions. Thank you for watching. If you found this video helpful, please give it a thumbs up and subscribe to our channel for more finance-related content. If you have any questions or suggestions for future videos, please let us know in the comments below. Stay tuned, stay informed, and happy investing. Bye for now.